Someone confirm, Doreen or Alison can confirm. The screen is okay. Okay, so I want that we do payroll posting because as an accountant, one way or the other, you'll be required to do posting for the payroll. Sometimes it's not the human resource to do posting. So as an accountant, you will be that's why we have what we call a payroll accountant. So when you are doing payroll accountant, you are in charge of payroll posting. First, you need to determine, you need to be sure of the payroll, how it looks like. Allow me to check on my email. Not even an email. Allow me to share the Excel here so that we can simplify. Just wish to share the Excel here. So that is it. My Excel. So the payroll, you will have the name, maybe the first name there. We will have the surname like that. So you will have the gross, or let's call it the basic salary. Basic salary. You will have here the either assume commission. Commission is added back to basic to get gross salary. Then here you will have the gross salary like that. What is deducted from the gross salary is affordable housing levy. SHA is there. NSSF. You will have here pay. You will have pay there. You will have the NITA. Assume this company gives us the medical cover. So medical cover, deduct off. This then the pay. Then you will have the net pay or net salary. Let's call the net salary. Net salary. What have I forgotten out? I want to check on that. For those who are working, this is what you expect to get. So this is what you expect. So somebody handing like, let's say is Harrison. Let me use this is of course. Let's say this is James. Basic salary of let's say 100,000. You get a commission of that month. So your gross salary will be this, plus this, like that, 103. The rate for affordable housing. Affordable housing, what's the rate? Let me see on chat box. Affordable housing. What is the rate for affordable housing? Affordable housing, let me see the rate. The employer and employee contributes how much? 1.5. So employer will contribute 1.5, and also what? 1.5, employer 1.5, employee 1.5. That is of the gross. So whatever you get here, assume I want to accumulate will be 3%, like that. 3% of this, like that. Then SHA, what is the contribution for SHA? Contribution for SHA, what's the rate? Is it 3.75%? What is the rate? 2.75%, yes. 2.75%. So 2.75%. And as I said, remember from the month of February, it will go up, it will double, it will go up. So this is it 3% or 6%? Employer contributes what percent for NSSF? Let me see. NSSF rates. Employer contributes what percent? Employee what percent? NSSF. 6% capped at 4,320. But remember now, moving from February, it will go up. It will go up. So it's 3% each employer and employee. So 6%. So like that. Now NITA, payee, this one is remember this one is this one varies because it is automatic in terms of payee. You can use the payee calculator to determine the payee. NITA is an expense to the employer, does not affect the employee's deductions or salary. So this is 50 per individual. So if you have 50 employees, by that you multiply like that. The medical cover, of course, will vary. This one will vary. Then what you get here is the net salary. So the net salary will be the gross minus affordable, minus CHA, NSSF. You get that minus payee, you get this, but you don't. The NITA does not affect that. NITA does not affect that. So you need to know the dates for filing this. Affordable housing is 9, CHA 9, NSSF is 9, pay 9, NITA also is 9, like that. So anything that affects the payroll, filing should be done and payment should be done on 9th of the following month. So like now, if you're an accountant, you are late because you must have filed by 9th of January for December payroll. Now, how do you do it if you are doing QuickBooks? If you are doing posting the QuickBooks. So let me now go back, posting the QuickBooks. So you need to create what you call journals. You need to create journals, and you need to create journals. Yeah. I don't know whether as this am I sharing something? Let me see. So you need to create journals in the Yes, you need to create journals. So we said, how do you create journals? You create journals here. You come to the accountant section and make journals. Make journals here. One of the journal you will make, you need to make journals against all this, or what we have talked about, what affects payroll. You need to have affordable housing journal, SHA, NSSF, PAYE, NITA, medical cover, net salary, others. So those are the journals you will have. And every time wherever there is any new upcoming rates, you will have to update your payroll. For example, here, assume I'm posting NITA. So assume I'm posting NITA. In the books, NITA, assume I'm posting NITA. We haven't paid. If we are going to pay, during payments, when it comes, allow me to use Excel again to go back to show you how you can do it in a very simple manner using the double entry rule. That's what we're going to do. So the first entry here, assume I want to start with the NITA. So NITA posting, or assume you want to recognize NITA in the books. Recognize NITA in the books. So if you are recognizing NITA in the books, you want to see from this chat box, which account are you going to debit, which account are you going to credit. So you have NITA, which account are you going? Can I see some money? Okay. So the account here in the books, you are going to debit NITA as an expense. Because this NITA you haven't paid, you create a liability. So you are going to credit NITA as a liability. NITA, you can call it payroll liability. Payroll liability. So during now payment, at the time you are making payment to NITA, the time you are making payment, so you are going to pay this expense. So you are going to debit this liability to go away. So debit payroll liability for NITA. NITA payroll liability, you can call it NITA payroll liability. NITA payroll liability. Then now you come here and the credit which one? Assume you are paying using equity, you credit bank. So you credit the bank account. In this case, can be either be KCB like that. That's how you set for that NITA from the books. So if you do that, you can come here. And say you want to create journal. You know whether you can see my QuickBooks. I want to use that. Can you see my QuickBooks? Can you see it? So you come here. You come here to journals, say make journal entry like that. So first, assume it's the month of December. So we record in the month of December, payroll for the month of December. So this is what I can have here. I will have here debit expense. So I'm going to debit NITA as an expense. NITA expense. NITA expense. Let me use 4 abbreviations like that. So you can see that account is not there. So you can set up as an expense. You say expense. Then you say count like that. So is an expense. Do we have it here? So the subclass of this one we don't have. We don't have any subclass. So you can remove and let's say save and close like that. So assume is NITA, let's say is 50. Assume you have one employee. Here you call the December payroll. So December, you are posting December payroll. The memo December payroll like that. Then you come here. That NITA now we create a liability. You can call NITA a liability. You can call payroll NITA payroll liability. Payroll liability. Create a liability very fast. Payroll liability. That's a liability you select from here. That becomes a current liability. Current liability because we expect that liability to be paid within a very short period of time. So you can have other current liability here like that. Then say continue. NITA payroll like that. Then now that is 50-50 like that. That's what you do. Okay, that's what you do. So then you come and say yes, save, close, save and close. Let me see. Do you have any question on posting that NITA first? I want to show you the other way you can do both of them. You can do one journal instead of having a journal for NSSF, journal for SHA, NITA. The other one is payee, net salary, gross salary, medical cover, maybe have allowances, advance salary. You can have one journal instead of having many. But I wanted to post this one for you to first to get the concept. Do you want me to repeat or I move to another way of posting without posting one by one? Let me see. Any reaction on that? Posting first? Okay. Now I can move to the next one. You can, instead of posting SHA, NITA on different journals, you can do one journal. But for you to do one journal, it means you must create NITA first. You must create NITA in the books, that account. You create another account for SHA. You create another account for NSSF, payee, like that. Like that. Now, like SHA, we said SHA is capped at, it is 2.75%. That is the rate for SHA. So what it means is that you take 2.7% of of your gross, of your gross, you get that percentage. Okay. So I'm going to have SHA, Social Health Authority, in my books. One, I need to recognize that that obligation of SHA as a liability in my books. I need to recognize that first. After recognizing, then the second part is when you are making payments. You are going to make payment to Social Health Authority. I'm going to credit the bank, credit bank, and debit that liability to go away. That's what first we are going to do. So it means I'm going to create one journal here. So first I will create NSSF employer, NSSF employee. So for NSSF employer, remember is the NSSF employer is 6%. That is 3%. Employer contributes 3, the other one contributes 3. Okay, so I'm going to have employer first, because now NSSF employer is an expense to the company. Then I group gross up the NSSF. That is now the NSSF will have 6%. So if the NSSF for employer is 150, the other one, the NSSF in general, that is now the employer and the employee will be times 2. Now it becomes 300. So meaning you have two accounts, one for NSSF employee, then NSSF liability. Remember, now you are going to have NSSF employer is an expense. NSSF liability, it now accommodates NSSF employer plus NSSF employee. I think we are clear on that part. So that's what we are going to have. It's the same thing, the double entry rule. Any question up there? Any question? Now, before I move to something else, now maybe you will ask yourself, you want to see what you have posted, the one we had posted for NITA. You come here, reports. I expect NITA to be on the trial balance on the debit side because it's an expense. You can see that NITA. And also I expect that the liability to be on the credit side. That's why you are seeing here liability is here 50, the expense is here. So it shows that we haven't paid this liability NITA owing. So when it comes to payment, you come and say, yeah, you can either write checks. You write checks here like that. You write check. Assume you are paying from equity. So it's 50,000. 50,000 here. So not 50, but 50. Then what are you clearing? You are clearing the NITA. Now here you must be very careful. Are you clearing the NITA payroll liability or NITA expense? We are clearing the NITA payroll liability. You put like that. Then you say save and close. So when you say save and close, you can see here we don't have anything remaining, but it shows that we have paid NITA. Everything is cleared. We are only having NITA as an expense, which we are going to claim come the financial end of financial year. That's what we are having in our books. This is very, very important information. Any question, please? Ask me any question. All clear. Very good. All clear. All clear. All clear. Good. Now, what else? The other thing, when you do everything here, the the last thing remaining, if you are an auditor, that is why I say it's very, very important that we have the master class, auditing class. That is very, very important. Once you have done the bookkeeping, what is remaining is now auditing. So auditors, either internal auditors, if you are internal auditors, external auditors, will have to come to audit what, or to investigate or examine, or to cross-check whether you are saying NITA you have paid. They will check whether did you pay that NITA. So they ask you to provide the payment receipts for NITA. So it's very important as an accountant you do your filing NITA receipts in a certain file, classify those files, NSSF, SHA, the same, everything. So that now the evidence to show that you paid is the NITA receipts. NITA receipts. Apart from the bank statement, you also need to have those receipts showing that you made payment. You maybe you made payment through RGTS, M-Pesa, all those. So it's very, very important that you have the receipts. Now, how do you do it? You come here, if you want to check the reports, because what is remaining, you'll be asked to give them the trial balance. For you to prepare financial statements, the first thing you need is a trial balance. You download here the trial balance, like that. But by downloading that trial balance, it means you need to check. You want the trial balance for the last year, like that. Maybe you want to prepare financial statement for the year 2025. Like now, we have some months to the deadline of filing 30th of the income tax, which is 30th of June 2020 or 2026, the financial returns for 2025. So if you are somewhere as an accountant, you'll be asked to provide this information. One is the trial balance. So I'm showing you how to download and export the trial balance. You put here, remember the dates you classify, very important. You want the dates for the last financial year. You put here as financial year. Check here from 1st January to January, that 1st December to 2025. Then that's what you do. And then now you come here, up here, you say create, and Excel create new worksheet. Then you download. Another statement you'll be asked is the general ledger. The general ledger, you can also do that. You give the general ledger statement. You come to the accountants and taxes. You come here, general ledger. After the trial balance is the general ledger. So the general ledger shows the transactions. All the transactions, either debit or credit, shows the summary of all the transactions. So they be able to identify you paid this amount to certain supplier, you received this from a certain supplier, like that. So the general ledger will have the bank, will have the various charts of accounts, the active charts of account. That's what you will have. Like that. That's my general ledger. You can see here is an MRC general ledger. In the equity, you can see what came in. This is what came in. We received some funds, 30,000. 10,000, that is the director deposited money. We received 14,986 as dividends from the bank or from other investment. Then we paid out to a certain supplier here of 5,000. We had bank service, bank charges of 14. Then we also paid a certain supplier here of 29,927. So we are saying at the bank, the balance at the bank under the equity savings is 17,950. 2950, 17,950. That's what we have. We have equity saving account is intact. We have 100,000, which we transferred from KCB to equity. This was fund transfer. You can see a fund transfer from KCB to equity. Then you can see here at KCB account, we have KCB account here, the balance is 100,000. We transferred money we transferred money to equity savings account 100,000. Then we also paid a supplier for fuel of 200,000, so that is 300,000. Our balance, remember our opening balance was 400 minus 300. Now we get balance of 100. That is how you read those financial statements. So once you download this general ledger, everything now you are good to go. You are good to go. So the next after this, you need to know how do you prepare the financial statement. You prepare financial statement by one having the prerequisites statement. That is the trial balance, and also you need the general ledger. You also need the what you call the bank reconciliation summary, which you can download from here. You come here, accountant. Come here. Let me see. Yes, you come here, banking. Then you come here, previous reconciliation. If it's equity, you want a detailed one, then you say display like this. Make sure here you tick. Once you display this is what you are getting. So this reconciliation shows you we have those checks that are uncleared transactions or cleared transactions. So from here, it clearly shows we have uncleared transactions. You can see here uncleared transaction at 2. There is a check we made to Gulfstream, check number 2 and check number 4, that they haven't been cleared. You can see here. You can see, and this NITA, remember this is 50, this one we did not reconcile. What is reconciled is being ticked. Ukiona yenye imekuwa ticked here, it means it has been reconciled. But these two haven't been reconciled. So that's why it's appearing like this. So what it means, it means that you need to go back and check whether did this check clear or not in the bank. So you use the bank statement to check whether it cleared or not. Then you need to clear this check. So that is it. Right. Any question? Today was a short one. Today was a short session because we wanted to clear what we were doing before. So I think that is the end of that. That's the end of that. So my advice is that as you get this knowledge now, after this, now you need to know how to prepare the draft financial statements. That's why on Wednesday, I have a session, one-off session for 2 hours on drafting financial statements. How to draft the profit and loss, draft balance sheet, draft cash flow statement, draft statement of changes of equity, all those. So we are going to learn how to draft. Actually, it's called audited financial statements. That's the most important thing now. So the moment you know how to draft those financial statements, then you are good to go. You will not have any challenge. um, in the accounting profession. So I wish you all the best. Okay, how to enter SHA and SSF into journal together without creating a single journal. So what I said here is that instead of creating one journal each, instead of creating a single journal for NSSF, for NITA, for SHA, for PAYE, you need to do this. Let me show you just, you need to come here and say create journal, make journal entries. So I'm doing it, I'm putting this there. Assume this is the payroll for December. The payroll for December should be posted for the month of December, but payment, remember, like if you are reconciling for December last year, you will find payment was made the following month, but you posted the payroll for December, the liability was cleared on the following month. So here, I will have my gross salary or basic, I will have here salary. I need to create this account. I will have here salary. Of course, you put as an expense like that. Salary. Good. So the salary you are paying for those individuals, let's say this individual is 20,000, 20,000 there. So you are going to pay NITA. You create NITA as a liability, yes, as a liability first, not a liability, but as an expense. So you are going to have to NITA as an expense. Let's say it's one individual, 50,000 as an expense. You recognize in the books. Then NITA again of 50, which is a liability. Now you credit. Such that now when you are going to make payment, you are going to offset the liability here. You debit the liability, you credit bank when it comes to making payments for NITA. So this is done. Come to SHA. This is where now you can have here sociality. Let me use abbreviations. Let me come here. Let me use those abbreviations here. Let's say at the expense. Like that. You can have SHA. So remember, SHA, we take 2%, 2.7% of that. So we're going to have here 2.75%. So one, we are going to create a liability in the books. We create a liability here in the books. So 2.75% of 20,000. Let's say is let's say it can come around let's say around 300 or 400. I'm just saying as an example. Of course, you are going to multiply this like that. And then now when it comes to NSSF, you will have two NSSF, one for employer and employee. Employer and employee. So you have here NSSF, you can have NSSF employer, employer NSSF. So this is an expense. Where is that? Employer NSSF. So this is an expense. I create as an expense here. Employer NSSF like that. So once I put here employer NSSF as an expense, it means I'm going to debit this account. So we said it's 3 point what? Is capped at what? What was the rate? NSSF is capped at NSSF is we do 3%, so 3% for employer and 3% for, so that is 3% of that. It could be around what? See 600? See 600 there of that. Then now you will have the main NSSF now liability, NSSF, I think NSSF liability. Why is that liability? Other current liability, NSSF, like that. NSSF liability, like that. So this NSSF liability, it will contain what? It will be here 12,000. This is 6. I think I made a mistake here. This is 3%. This is 600. So this will be 1,200. Why? The employer contributes 600. Employee contributes 600. So in total, the employer is going to pay 1,200 to NSSF. Remember that. That's why I'm putting here 1,200. 1,200. Okay. The same for payee. You create auto liability for payee. You create a liability here. You call payee. You create a liability. That's a current liability. What is current liability? Yes. You create a liability there. Okay. And call it payee like that. So you create a liability. Payee now depends on the tax bracket. 20,000, let's say, it could be around, which is of course here below the bracket. In Kenya, you tax the above 24,000. That's when you now. This is below the tax bracket, so it's zero. It's zero. So there is nothing there. Yeah, you don't even need to recognize this payee in the book because at this here it is below the threshold. That's how you do it. That's how you do it. Then you come and say save. I think there's something general transaction require an account on each line. I think there is just a minute. There's a line here. We need to clear this one. There's 19,000. Remember, this 19,000 we haven't recognized it anywhere. That's why it's remaining. Supposed to balance. It's supposed to balance. So there is that 19,000. What's the 19? Was something like so we have the net salary. Actually, that is now the net salary. Whatever the balance between 2650 minus this, that should be the net salary. So if you subtract 2,650 minus 1,650 is 19,000. So that 19,000 is the net salary or net payee. It's a net payee. So the net payee is now the not the net pay, but what you call the net salary, what you declare in the books of that. So once you pay that net pay, it's now when you recognize in the books that net pay. This one, the reason why it's giving me this is that there's a figure here. General account, each line with an account. There's a line here. We haven't declared very good. 20, this is 50, 50, 400, 60, like that. This one, we need to clear. So this is 20. 2650, 2650. Oh, this is now the net salary, which we need to indicate here. That's what was missing. Net salary. So when we are going to pay the net salary, we debit the net salary, we credit bank. Sorry, why is it jumping here? Should be net salary. Net salary like that. We create as a liability first. Yes. Yeah, so once now you can see it's 2650, 2650. Then you say save and close like that. So when it comes to payment, you need now, once you have money, for example, your paid salary, now you need to confirm from the statement or a receipt. Your paid salary worth of this much. So then if now, in terms of, assume you are paid salary, this net salary, you come and say write checks. You write checks. Assume you paid using equity. That was 19,000. So I put here net salary. I want you debit the net salary you credit bank. The amount was 19,000. So you clear off. So if I go now to let me refresh first. If I go to my trial balance, the net salary, you will not find it on the credit side of the trial balance because I've settled off that liability. So you will not find off that. You can see it's not there, but you will find the net salary. You will find not the net salary, but you will find the salary of 20,000 as an expense. Remember, the salary of that individual was 20,000 as this. So you can see clearly we have not cleared the liability, the NSSF. We also haven't cleared which SHA is outstanding. We haven't paid SHA like that. So if we pay SHA, we debit SHA, then you credit the account, that is the bank account. The same happens to the NSSF. The same happens to the NSSF. Assume there is a reversal. You made salary to this individual and there is a reversal of 19,000 that came back. So you do the same adjustment for the payroll, reversal of salary. Sometimes the salary can bouncing off, comes back, reversal, either money that's in the account or the employee provides a wrong account or a wrong detail. So nothing that was affected. So it means if nothing was affected, you reverse back the transaction. I think Alton have answered your question. It's a very good question. That's how you do it. And that is the practice. You do a single journal. Don't do so many journals like that. Just do a single journal. So if I've done that single journal, it means I need to remove this. Remember, I had this 50 here. This was a single journal. I need to check that single journal. I think I declared that single journal somewhere here. Not this one. There's a journal I created here. This one. I think so. No, this is not a single one. You remember from the start, I created a single journal. This one, yes. So this one I need to remove it because already I've now duplicated the same for one journal. For one journal. Yes. Then yes. Doreen, you're asking, are we done with QuickBooks training? Actually, QuickBooks is large. is that as per the advert, I was targeting on specific areas, very important areas that you can get. Either you are eyeing to go for career progression, or you are training as an accountant. That's why if you look at most of the adverts, or most of the employers are looking for accounts payable, accounts receivable, payroll accountants, like that. That's why I specified those areas. But QuickBooks, remember, when you look at those areas, we haven't touched these areas. There are common other areas here, like there's a lot you can learn here. There's a lot you can learn, but you need now to practice. You need to practice. But whatever we have covered is the most important thing. If you know accounts payable, accounts receivable, how to enter bill, how to pay bills, then I think there's nothing will hinder you from performing your duties as an accountant. So, any question? So there is this training for financial statements, draft of financial statement. It's another training that I'm focused on Wednesday, because now that is a different training that requires you, after you have known now the QuickBooks, we move on how do you prepare audited financial statements. Audited financial statements. So if there is no question, we can stop there. You have my number. That's 0708-534. That's the personal number. You can get me through 708-534-551. That's the number shared through your chat box. So you can talk to me whenever you're having any challenges. I'll be able to assist. I'll be able to assist. If you have any referrals, refer us to our trainings. And also we do installation of tally system. I think one of you must have paid full for tally system. I think is it Peter also? I will check. We have that training again. So I think I will stop there. Thank you, and God bless you. Good night.